G'day, welcome to Monday night's video. Tonight we're going to look at a setup on the Great British Pound US Dollar, or the cable, for all you familiar with Forex. Now the cable is one of my favourite markets to trade because it's pretty systematic, pretty mechanical with most of the setups that I like. This is a pretty simple setup I just wanted to show you. Now this is something that occurred a few hours ago. The setup actually came about on the 50% retracement. Now I know a lot of you are probably taking this with a grain of salt, you know, it's trading retracements and again Fibonacci, okay. Well, realistically I don't follow most of those styles. I do like midpoints, so I do like it when a market can move to a new low and then spike higher, and that's what the British pound's done. It's moved to a new trend low and then spiked higher, and then it's retraced 50%, and it's actually held at 196.45. So the trade setup is basically to buy into weakness around that 50% level. So a long could have been entered at 196.45, say, and your stop could be below 195.70, so say 195.60 would be your stop. And this is a classic example of one of the books I've read during my career, The Trading Rule That Can Make You Rich. Now really that's a derivative of Gann and some of the Fibonacci techniques, and Edward Dobson liked to buy 50% retracements and looked for basically turning points within little short-term structures in the market. So we've had a retracement on the British pound, and that trade is looking to be up around 50 points at the moment, had you have known about the setup. Now obviously I can't give you the setup live. I do have other businesses where I do offer live trading signals, but this website's purely about giving you some setups so you can make some money on your own. So keep an eye out for these kind of setups, and keep an eye on that 196.45 level. Obviously it would have to come down there for the trade to be filled. That's why I've given it to you after the fact, so there'll be no one coming back at me saying I've given you an actual trade signal. So the trade setup is 196.45, the 50% retracement's pretty simple. And if we just take those off, it's a raw price chart. Let's just have a look at the candle chart. You can see we had a big downtrend, and then we had this 194 level hold here, and we've moved straight through, back up through 198, all the way back up towards the 199.70s. Had some topping candles there, and this big red candle down on the jobs data, so that's really the reason we fell on Friday. A little bit of liquidation. It's hit the 50% juncture and looks to be rotating back up on itself. So that's really it for the 50% retrace trade on the cable for the minute. There's been plenty of other opportunities in other markets. I just want to share that one with you tonight. We'll be back tomorrow, and we'll probably be looking at something that's happening on the dollar yen at the moment that I'm very interested in. Alright, talk to you tomorrow. Safe trading. Good afternoon everyone, it's Niall from LearnToTradeTheMarket.com. It's approximately 1 PM Thursday afternoon. Going to have a look at a couple of things today. Two fakey setups that occurred on the New Zealand dollar, also pin bar reversals, combined signals which resulted in a fairly decent profit for myself. I've now just recording the executed trade section of my broker that I execute through online. You can just see here the executions that I made. The trade was to sell a total of 800,000 New Zealand US at 0.7825. That was my entry, and I then proceeded to cover at 77.25 for plus 100. I then basically scaled out of the position, and I had a couple of rollovers there. That's when the day rolls over. So as you can see, there was a total of approximately 110 points made on 800,000 position, resulting in around a $10,000 Australian profit for the US. If you're in the US, that's approximately $9,500 and around £5,000. Now if we have a look at the New Zealand dollar daily chart, we can see we've got a fakey setup occurred twice, which set up the trade for me with a lot of confidence, so that's why I've taken quite a large position, because the stop was perfectly placed and the downside target was quite huge. So let's just have a look where the first setup was. Now, the fakie setup is a series of inside bars followed by a false break. Okay, so it's a false inside bar break. The first one was here, where this line is. You can see this bar here was the fakie. We had an inside bar, and then a move up and then fail, and we came down. Now, I didn't take that one. I just didn't see the signal, so I didn't take it. I then waited for the next signal. We had a series of inside bars here, and then a move up, and then a reversal down. So if I just trail that down, you can see the high of this bar here at 78.70 odd, and then this bar here moved up and then failed, very much like this one back here. We can see the pin bar or the reversal bar form, and then subsequent bearish price action. So what I did was I saw that signal, then I zoomed in to the 4-hour chart and set up an order to sell at 78.25 and just pretty much just rode the market the entire way down overnight, made around 110 points. And that's really all I wanted to point out. I try to say in all my videos, keep it simple, look for similar setups, trend trade. Okay, and I'll just take this chart out and I'll show you what I mean by trend trading. Alright, if you're in the market, you only want to be playing in high probability setups. Now, a trend trade is when you have general sentiment in one direction, and this is certainly a short entry in the direction of the midterm trend, so our odds are increased. I mean, there is reversal signals in uptrends to go short. They're called counter trend trades, but I still believe the tried and tested way to trade is find a sentiment that is in one direction, a trend, and try to stick to that. Even though we had this violent upside correction, this rally, this downtrend line seemed to still contain. You can see we only had upper tails on the candles push through. We didn't actually have closes above the downtrend line. And I keep saying modern day technical analysis really is the very basics of all textbooks that show your simple approaches, like your downtrend lines, your moving average crossovers, your box breakouts, support resistance. That's really all you need in the market. And I try to tell people that they have to keep it simple and just be patient. Now, there's been 10 trades similar to this on this chart. I can see, reversals everywhere. There's reversal up the top here. There's one here. There's another one here. Another one here. Another one here. They're everywhere. You've just got to be patient and wait. But they don't happen every day. They happen, a couple of times a month. That's all I had was a New Zealand dollar. I just want to keep sharing these setups with you. And if you've got any questions, go to learntotradethemarket.com and post in the forums, send me an email, give me a call on Skype. Certainly if you're interested, I'm happy to help you, but the best way to get information from me is on the forum, so I encourage you to post on the forum and let's get that community active. Be sure to tell your friends about the forum and the videos. The more people that understand these methods, the better we're going to be as traders. We have more people to bounce off and more people following real trading approaches. It just helps the general feel of the market and of your network. If you've got people around you that are trading successfully, they're only going to help you and help you spot signals and setups in the market. Alright, that's all I've got for today. I'll talk to you next time when we have a setup.